All right, everyone. So this is going to be another quicker chapter, the 1 minute opening, 1 minute, 5 minute ORB, which is an opening range breakout. This is not my go-to setup, but you will hear me at times refer to opening range breakouts, and it's important that you understand what they are. Again, just like the half dollar, whole dollar breakout and the break of the pre-market pivot, by themselves are not always the primary. They're often sort of a secondary condition or a secondary setup, the primary being break of the pre-market high or perhaps the first pullback. But it's still important to understand these secondary type of setups because they add strength to the primary. It's when that's what essentially creates both the multi-time frame alignment and the multi-pattern alignment. So an opening range breakout essentially is the first 1 minute candle forms, has its high and its low. The stock breaks over the high, that's a long, breaks below the low, that's a short. That's a very simple way of looking at it, but that opening range candle kind of becomes a trigger. And if we break over the high, then that's when we have the long bias. If we break below the low, that's when we have the short bias. And so some people actually trade a 5 minute opening range breakout or a 15 minute opening range breakout in that same way. So 15 minute range, we break through the high, long bias for a trend up. We break the low, short bias for a trend down. So 15 minute opening range breakouts are very common, break out and break down. 5 minutes and 1 minute are also common for more active traders. So essentially we have our 1 minute opening range. And if the high was here and it pulls back, then we may buy 5 minutes later on the break of that high of that range. So the entry, this is one that works a little bit better on stocks that have a bit more of a grinding pattern and or higher floats. The fact that the stock didn't break out and make a big move in the first 1 minute and is already giving us this little pullback, whether it's through the 1 minute, 5 minute, or 15 minute time frame, it already indicates some sluggishness. So the fact that it didn't create a red to green setup also means that it didn't get nailed at the open. It just kind of is sort of sideways in range. So it's not a setup that I'll trade as often as some of the others, but it's worth noting because occasionally we will see stocks churning and trading in sort of a choppy opening range. And then when they break out of that range, that's when they really start to open up. Typically, the correct entry point on this setup will be a break through the high of day, which is the high of the opening range. So the target on a 1 minute opening range breakout is typically a retest of high of day. If it's occurring right at high of day, then we would just say, 15, 20 cent possible target, maybe resistance up at the next half dollar or whole dollar. Depending on the condition of the overall market and the characteristics of the stock we're trading, expectations certainly should be adjusted accordingly. A risk factor here is that if the 1 minute candle has a really big range, then you're getting in at the top of that large range, and that's kind of an unnecessary level of risk. Also, the fact that it's already a little choppy is not great. Stop loss typically would be the low of the opening range candle, whether it's on the 1 minute or the 5 minute or even the 15 minute range, depending on what you're focusing on. It's not a setup I trade a lot, but it does show up from time to time. And so in this case, the one opening range candle had a high of 540 and a low of 506. It double bottomed and then ripped up through 540 and goes up to 560. So it's a small opening range breakout. But you can tell then it dips back down. It just doesn't really hold up super well in this particular case. In this example, we have a 1 minute opening range from 509 to 526. And when it breaks out of that, we do actually see a nice surge of about 40 cents. It then ends up kind of retracing back down. And it's not perfect. Here we have a little bit of consolidation right at the open. And the high of the 1 minute candle in red is about $10. It then dips down to below 9, pops back up to just over 10, pulls back, and this ends up being probably more of a 5 minute opening range breakout. This right here is a little bit of a consolidation, and then it rips through that level into a halt going up at 11. Opens higher, surges up to 14. Opens higher, squeezes to 16. And then in this case, the easier setup was the first 1 minute candle to make a new high, the first pullback. Right? That was the real spot that was easier. The first pullback, and then it rips up into another halt. And then it opens higher and squeezes up to 19. So from 8 to 19, that's a big range. Here's another one, choppy right at the open. Very similar in a way, just that choppiness at the open. Drop, up, drop, back up. Drops up, drops back up, and then it rips through that level of $1.60. Now in this case, this little consolidation was also right below the volume weighted average price. So this was also a break of VWAP setup, and it went from $1.60 all the way to $3.10. That's a pretty big move. So let's look at this example of an opening range breakout on CPAH. I'm not sure that, I think this is actually the only example I have of this particular setup. I think it's a setup that I may have traded more at earlier parts or times in my career when the market was a little choppier. So trying to see how this is really a good, oh, okay, this was the opening range because initially it's a gap and go, right? And then it pulls back. And, well, so the high of that first 1 minute candle, so we got the gap and go, and then the high of that first 1 minute candle was right here at 66. So this becomes a 1 minute opening range breakout as it breaks through 66 or 67. So, you know, it's a candle over candle kind of pattern. First candle makes a new high. Now the 1 minute opening range breakout, you know, so that was the surge right there. That was where we ended up getting the volume. But the thing is, you know, you have that 1 minute candle. If it then goes sideways for like 3 hours, that would be weird. But then is it really a 1 minute opening range breakout? It's not really an opening range breakout if it's past 9:45. It's an opening range breakout if in the first 5, 10, maybe 15 minutes, it has a range that's kind of tight and then it breaks out of it, like some of those examples that we saw. This is certainly a fine example of that. But if it starts to consolidate for a long time, I don't think of it as an opening range breakout anymore. So these are good opening range breakouts. This one was not as great, but these ones are okay. And then, of course, they give you the first pullback. And so if this was a setup that you're like, I don't know, I'm not going to really focus on this. I'm just going to say, okay, this was choppy in here. Then it goes into a halt. Maybe on the resumption, you would have done a dip trade at 11.95 for the breakthrough 12, whole dollar, maybe. Then it squeezes up to 13, up to 14. Okay, halt's going up. Then you buy the first pullback. Those would probably be better than trying to focus on the opening range breakout. But you will hear me talk about it occasionally. You'll hear other traders in the community talk about opening range breakouts. So it's worth knowing at least what they are. So again, like I said, that's a little bit of a quicker setup. It's not one that you'll see me trade a lot, but with that, let's continue on to Chapter 7, Setup 6 on the red to green move. All right, so Chapter 7, Setup 6, the red to green move. This is a setup that is a bit more common, but inherently the fact that it goes red before going green shows a little bit of weakness, but that can create a bear trap. And then the bear trap, as it rips back through the high, now you have a combination of short sellers covering and long traders jumping in. So the red to green move essentially is when you have, you know, whatever pre-market action you have, whether it opens at the pre-market high or it opens a little low, it doesn't really matter. Whatever you have pre-market, at the open, at least two, usually 2 red candles, sometimes 3. Maybe just 1, but usually 2 or 3 red candles. So a couple of red candles and then whoom, springs right back up, surges through the high. As it surges through the high, it's hitting high of day momentum scanners. Now traders are jumping on it who are using those scanners to find what's moving. Red to green, the entry. This can be a truly powerful setup because this is where short sellers get trapped going short. Perhaps it was on the 1 minute opening range breakdown. Perhaps it was just on the immediate weakness right away. But that early weakness in the first few minutes of trading, well, it gets them into a bear trap. And then all of a sudden, that explosive rip through the open price and into the highs, it forces them to cover at the same time as long traders are jumping in. And of course, long traders who are using these momentum scanners, we see the stock hitting new highs. One word of caution is that I've seen this also turn into a bull trap where it pops up and then it flushes right back down to the low. And now we had a bear trap, then a bull trap, and everyone is upset. So sometimes we do see an immediate rejection. So if that's the case, and the stock is clearly choppy, has a large range, it's understandable to feel frustrated. It's a best bet just to step back away from that stock and leave it alone. But when this setup works, we can see a really powerful move sort of through that level as momentum traders continue to buy the pullbacks and short sellers either continue to cover earlier positions into the squeezes higher or simply sit on the sidelines feeling defeated or holding as a loser gets bigger and bigger and bigger. So the target is first that the stock goes through the high of day, because if it has a couple of red candles and you're buying, you're actually buying below the high of day or the regular high of day of regular trading hours. So we're buying the first 1 minute candle to make a new high after a couple of red candles. The ultimate target is a break. Well, it depends on the pre-market chart, but usually we'd like to see a break through the pre-market highs or higher. Risk factor is that the stock already went red. It shows weakness, and this is really the biggest risk factor of this setup. So being careful not to get caught in a bull trap. You know, if you accumulate a starter position, you anticipate the red to green move, you'll be in the best position, but also means sometimes you're buying near the lows without confirmation, which is also risky. tight stop losses on this setup. You do not want to hold it if it goes back to the lows and just keeps going lower. Do not want to hold that breakout or bailout. Now the setup can work really well because those early short sellers get stopped out as the stock squeezes through the highs, but the early weakness is definitely a sign and a reason to be cautious. So this is a picture-perfect red to green move. Now it's a 5-minute chart, and that's okay. Sometimes it occurs on the 5-minute, sometimes it occurs on the 1-minute. But what we have here is a stock that appears to be relatively strong pre-market. The bell rings and it just kind of sells off. In fact, it goes below the volume weighted average price. This is a 15-minute, 3 5-minute candles. That's 15 minutes. First candle to make a new high right here. It breaks back through the volume weighted average price and actually rips so violently that it gets halted going up. Okay, so that's something we can work with. Now it opens higher. It pulls back, it dips to the VWAP, then it rips higher to 650, 750, pulls back. First candle to make a new high pops up, pulls back. What pattern is that? An ABCD pattern. Not a perfect one, but it is an ABCD pattern, sort of that W formation. As it breaks this level here, which could also be called a pivot, then target is high a day, surge through 8. Notice it went just above 8, then came down just below it, and then surges through it up to about 835, 840. So the entry on this could have either been the first candle to make a new high right here, or as it popped up to a high of 550 and then pulled back, along for the break through the $0.50 to anticipate the squeeze through the high a day. Now, if you just bought at the high a day going into the halt, at 575, it gapped higher and that would have worked, and certainly some traders would do that, but that would be a high of day entry. We'll talk about that in chapter 8 with momentum trading, but that's a little bit of a high entry. I think the best entry on this would have been right here around 550, as we can see it popped and pulled back and provided a micro pullback. Here's another one, CLRB. It goes red 1, 2, 3 candles. First candle to make a new high, 320, and it rips there up to 370. 1-minute candle to make a new high right there, and it squeezes up to 440. First 1-minute candle to make a new high up here, false breakout at the $0.50. It dips down, it gets above the $0.50. Now we see it starting to be choppy and kind of grinding up there at the top. We don't like that price action. We really prefer this nice clean price action like this. This choppiness as it starts to kind of flatline up at the high is sometimes right before it takes a dive. Now it takes a dive, bounces back up, but the clean setup here was a red to green move right there. Now, going back to this first candle, this is a 1-minute candle. It broke that pre-market level, and I don't know if that's a pre-market pivot or the pre-market high, but you could have gone long there, and we might have. It pops up to 360, then it breaks back below the $0.50, and we probably would have said, doesn't work, we're out. Maybe it's a loss or a small winner. And then we keep watching it. It's still presumably one of the leading gappers with a lower float, therefore continuing to watch it. And then that first candle to make a new high, 320, boom, we get that rip there up to 360. Pops up a little higher, pulls back, and right there we get that surge up to 420, up to 440, pull back, pop higher, pull back, a little bit higher, a little bit higher. So the pullback right here and the red to green move. Here's another one that pre-market high was up here. It opens a little low and just sells off. It then, the first candle to make a new high pops up on the red to green, but then drops back down. But it doesn't go back to the low, right? So the long down here for the red to green move, and then an add around 480, looking for the move over 5. So here we have the red to green as it surges through, little micro pullback at about 470, then it pops up to about 5, drops down a little choppy, curls back up here, pulls back, and now this is a 1-minute pullback. You can tell that this one's not super clean, but it is a red to green move. There's a red to green move. Pre-market high there at 12. It opens low and then whips right back up. It's a high volume red candle at the open, and then it rips right back up. So that could have been some market orders that sold at the open, just kind of gives that little sell-off. So we sometimes want to allow for just a little bit of profit taking at the open and not be shocked if we do see a little red at the open. And then if we start seeing green on the tape, and of course this is a stock we're watching because it's the leading gapper, boom, that's the long, and this rips from 1180 up to 1280. That's not bad. Does a little false breakout right up here, which we wouldn't have loved, and then comes back down. I don't know if, might have bought that first 1-minute candle to make a new high and gotten stopped out, but hopefully the loss on that wouldn't have given back this whole profit. Here's another one. Strong pre-market, it opens, sells off, first candle to make a new high, and it rips up here. I guess not super fast, but it definitely curls up sideways and sort of grinds higher. I guess I would say that this is actually a pretty good example of a grinding stock. Even though it went from 450 all the way to 11, its biggest move was this one candle pre-market, which is probably when breaking news came out. So Mike says, how do you know it's a red to green move and not a bear flag? Well, that's a great question, because initially, as it starts dropping, if it goes sideways at the low, it could be a bear flag. So essentially, the reason that I'm thinking it could be a or it could do a red to green move, and not be a bear flag. I mean, it may even be a bear flag, but then I think that it's going to resolve to the upside and not fail, is because it's still the leading gapper. It still has good news. I'm expecting a little bit of sell-off and then that surge higher. So, you know, it's sometimes the case that you go in for that red to green and it pops up just a little bit, and then it's just like right into hidden sellers or right into a wall of big sellers on the level 2, and you're like, all right, there's someone that thinks this is a sell and they're shorting it or whatever, and it just doesn't work. So you do have to be mindful that any setup could become a false breakout. And so the things that help kind of give us points on our side of it may be working would be the combination of the float, the price, the market sentiment on that day, whether or not that stock was the leading gapper and the one that is obvious and that everyone is watching. The chart can also be a little bit of an indicator. This is a weaker chart because it gave back about 50% of the move. This one here it's a high volume red candle, but it doesn't look like a bear flag. That's a 1 minute candle. It's just one red candle. So in a way, that's actually also a 1 minute opening range breakout. This does look like a bear flag, consolidation at the low, but then certainly breaking to the upside as it surges through that level. This one doesn't really look like a bear flag. It just kind of sold off, and then all of a sudden is that V shape as it goes right back up. This one here, so let's see. So let's look at this one. So we saw that one. So this is Y10. So here I know we looked at this in another instance of, I think maybe the break of the pre-market pivot, but this went red and then rips back up. Consolidation above the VWAP, it's holding that level, and then it continues higher. So first candle to make a new high is the setup. Right here, first candle to make a new high is a 1 minute candle. That's the setup. Sells off for 2 candles. First candle makes a new high, it breaks over the VWAP, and it surges up. Now, other times where we might feel a little bit more confident that this could be a nice red to green move would be if, let's see, if we can, and I'm just going to pull up my chart here. Not that I'm likely necessarily to find an example of this, but we can look at BPTH maybe at the open, let's just say. So let's just pretend, for instance, that, you know, we're kind of going to say that this bounces off of its ascending support line. Let's just say, you know, so we're like, well, we have this ascending support line from pre-market. So it's going red, but it kind of looks like it's bouncing off of it to the penny. Now, this one didn't really do that. It did come lower, and I don't think anyone probably drew a line right there. But, you know, if we had drawn a line from pre-market that was ascending support, you know, then that certainly would have been a possibility, right? That, okay, that's a reason why it's going to bounce there. But that is going to definitely depend on what the pre-market chart looks like. CGIX from today. This one, I think this one went red initially, or maybe it just squeezed. I can't remember. And yes, correct. We have live classes, not tomorrow, but we do have them the day after. Just a scheduling issue there. Okay, so this here, you know, I mean, I don't know that you'd really say that that was it. But again, it went red. It kind of bounced off, let's just say, an ascending support level, and then it continues higher. That's not really the case because that's not an obvious level. An obvious level on this, you know, I mean, I guess, I don't know, maybe you could kind of say that. So that might have given us some confidence that this could be a red to green move because of that support of the ascending trend line. But we would probably only say that if the ascending trend line was fairly obvious. This 3 red candles in a row, and then it just surges up, sometimes unexpectedly. Sometimes you're like, whoa, where did that come from? And when that's the case, sometimes we miss the move. We see it all of a sudden lighting up the scanners, and we're like, yeah, I saw that one on the gap scanner. I didn't think it was going to do much. And then at the open, I noticed it was red, and now all of a sudden it's hitting the high day scanner. Okay, let's look for the first pullback. So that's where we look for the first pullback, which in this case probably was the cleanest entry. Red to green move here, you know, sort of an inverted head and shoulders, actually. Shoulder, head, shoulder, and back up. And it's on the 1 minute, so I don't know that a lot of people would have really looked closely at that. But the break back over the volume weighted average price, then look at this little 1 minute consolidation right underneath 10. So see that? I'll activate my zoom in here. So right there, little 1 minute consolidation right underneath the whole dollar. Then it rips through that level and squeezes up to just over 10.50, the half dollar. So another one here, this one goes kind of hard into the red and then rips and bounces back up. I don't know that we would have necessarily taken that trade unless it was the best stock of the day, but it's not that pretty. And even then, this pullback is not that pretty either. So this may just have been one that, yeah, it did a red to green, but I don't know. So this one, that polo looks so similar to another one. I mean, they just look so similar, but they are different. So sells off, rips back up. So a possible trade here could have been along over the pre-market pivot, 440, 450, maybe along over the half dollar or the whole dollar of 4, because over the whole dollar of 4, then we're breaking that psychological resistance. Then 416 was the open, so then we're pretty close to breaking through the open price. If we break through the open, then, you know, back up towards the pre-market highs. But so you can see how sometimes these moves become kind of violent. It's red and then all of a sudden just rips straight up. Pixie at the open, red, and then rips right up. Pulls back, pops up, pulls back, pops up, pulls back, pops up, pulls back, rips higher. So the pullbacks on this one on the 1 minute working fairly well. A little choppy, but they were working. This one is kind of tricky because that red candle is actually a topping tail. But you can see how it went red and then surged up. So it's not uncommon for a pre-market gapper to pull back a little bit at the open. You know, you have some people that take some profit, it dips down a little bit and then surges. And in this case, this surged into a halt right here, halting up. Opens higher, sells off, then surges into a halt again. Opens higher, sells off, and it looks like it might surge into a halt there, and then it fades. This one, a little bit on the 1 minute of a longer period of sell-off, and then all of a sudden it rips up. Look at this right here, how it taps. It looks like about 510, pulls back. The long there would have been about 510. I mean, yeah, sure, if you could have been in down there, but you probably wouldn't have noticed it. Safe entry there, I think, would have been 510, buying right in that candle, and then surges into a halt, it looks like. It pulls back, pops higher. This is another one that is on the 1 minute chart and kind of tried to red to green here and ended up being a bit of a bull trap and failed and came back down. Then it tries it again right here, and this time it breaks through the volume weighted average price and surges up to this line right here, which is 450, half dollar, dips below it, gets above it, back below it, back above it, up to 5. So a little choppy, not picture perfect. And some of them, they just look so clean, and some of them you're like, man, that's really choppy. This one's pretty clean. This one is a nice setup. 2 small red candles on the 1 minute, and then whoom, goes from 320 all the way up to 460. Pulls back, 1 minute candle to make a new high, a false breakout, dips down, and then surges back up 5. And notice this double top right here at 5. So it hit this level right here, tapped once and twice. So a double top right there at 5. Okay, so let's look at a live trade on a gap and go. Sorry, gap and go red to green. Okay, so have we looked at this one already? No, I don't think so. Okay, so this one's SEII. Okay, so a little higher price. We're at 941. You know, as I look at this, okay, this is better. Okay, so here we had a bit of a sell-off, and now looks like our pre-market high or our high a day is about 450. So we kind of went red, but as we broke through that high right there, it looks to me like that is this high kind of right here is a little bit of a pivot. We break through that level and then surge higher. So let's play this. So let's watch over 440. I'm in at 437. We want to see the break of 440 and then 450. So right now I'm holding. So this is slow. This is not the instant resolution you like. This would probably be a decent time to say breakout or bailout. It's clearly not ripping the way we would typically like. I am still holding it. It's the only stock I am in on the day, and I've already lost 600 on it on my first trade, it looks like. But here we go. There's back to 30. There's 40. Can we get through the $0.50? Okay, let's back that up. So there is where it starts to come, move a little bit higher. So it starts to come faster through that level. There we go. There's 450. Breaks through that level. 460, 463, 469, 465. So it starts to open up as it gets through that level. Now it's hitting high day Momo scanners, right? See right here, 944. Now it's hitting those scanners as it's hitting new highs. So then, the question is, how high does it go? Now the first pullback after that breakout, traders just noticing it for the first time, going to be looking for that pullback trade. Are we going to get a squeeze up to 75, 85, or 5? And in this case, it seems like it does get a little bit higher. There's a nice bid there at 66, 16,000 shares. Are we going to get that break? This is a 1-minute micro pullback here. I bought it, and I'm looking for the squeeze over 5, but it looks like it's not quite strong enough to do it. So it's only up 30%. It's a gapper, but it's not the big, exciting stuff that we've been seeing recently. Yeah, but it's okay. So, all right, so next one down here, MTBC. All right, so let's look at that one. All right, let me actually move this over here. Oh, there we go. We've got that. Okay. That's fine. Okay, well, we've got it over here too. Okay, so that MTBC, let's grab this one. So this ends up being, looks like a small winner. All right, so MTBC, it's 935. That's this level 2 window right here. So you can see how it went red. Now it's curling up. The red to green apex point, which is the moment it goes green on the day, is right around 90. And then what's it going to do? It's going to start hitting high day Momo scanners. So watch here, over 85, 90, hit the scanners right there. Now, the scanners that I use to search for stocks hitting high a day, most brokers have those types of scanners that they've built out for their, for their traders. So we're essentially all using the same data to look for stocks hitting new highs. We just filtered a little bit more to what we think is stronger. But as it starts hitting those scanners, now you start seeing it's hitting again 94, it's moving higher. So not a huge winner, but a quick little red to green move. So a nice base hit trade. Seller on the ask as it comes back down. Now, again, it's not perfect, but it's not bad. And let's look at one more here, which is on SPI. Now, I took an early dip trade out of the gates. All right, let's see. Okay, so here's SPI on the left. It's up 159%. It's our leading gapper. All right, so it meets all of our criteria there. We've got a minute to the bell. Adjusting my share size to accommodate my plans for the day. Okay, so here's the open. Here's our pre-market chart with a high at about 715. So we've got about 715. That's the high. First candle to make a new high. Looks like it's going to be just about over 7. So my order's at 7 with my hand on the buy button. Are we going to see a little dip? A little dip there. So we're seeing a little dip. And so occasionally I will do what we sort of call the dip and rip, where it opens, and this is a stock that's opening very close to the pre-market highs. We see a little bit of a dip at the open, and it takes a bit of courage to take this trade. However, leading gapper, we know how quick they can move right out of the gates. It's a good pre-market chart. It's right underneath 7. So I see some red, I punch it, I buy there, 79. Not bad. There's a seller at 80. We want to see that break. There's 80. There it goes. There's 90. Now, people are going to start to recognize, okay, this thing is moving. 90, 95, 97. Watch. 90, 97, 98. 90. There we go. 715. Pre-market high. We want to let it break through that level. Now, I took half off the table there at the pre-market high. That was a target. Okay, pre-market high was tapped. I take a little more off the table. Now I'm going to wait for a pullback for the next trade. Honestly, I feel like I sold that a little too soon. I would have held that longer in this market. But hey, there's another seller there at 34. So we are seeing some sellers. So now at this point, given that we've just had a 50-cent pop from like 75 up to 25, we can let it pull back and see if we get a chance for maybe a 1-minute pullback or something like that. All right. So this one, you know, it may give additional opportunities. I don't remember here. Looks like, so it's a little bit choppy right now. It's going red here again. This down here, 28 is the volume weighted average price. So 28 could be a dip spot. Let's just see what it does. There could be a dip down there. Does it bounce? Back up into the 60s or 70s? Yeah, a little bit. So it bounced off 30, the volume weighted average price. Would that have been a home run? No, it's probably not something most of you would have gone for, but that might have been something today that I would have taken. At this time, no, but I might have taken that if I saw that setup today, a bounce off the VWAP. I've been doing more of those dip trades, and we'll talk about those in Chapter 8. So, all right, well, that's that example, and that wraps up our red to green move. Again, you will see some more instances of red to greens and dips in the live trading archives, and as we get further into the classes in general, some of the examples, we do have some overlap where it's a red to green, but it's also kind of half dollar, whole dollar. So you'll continue to see these examples. All right, so with that, we can continue on to Chapter 7, Part 7, which is pre-market gap and go trades. All right, everyone, so we're going to jump in here with Chapter 7, Setup 7 of the gap and go strategy. Setup 7 is pre-market trading. So this is sort of this area, this is a new section for this year because a year ago, as I showed you in my metrics, a year and a half ago, I was never trading pre-market. It wasn't, we generally didn't see that much volume. I can just show you some metrics here. So I could just do 1/1/2019 to 12/31/20. I mean, 2019 is fine. So filter here and then sort by day and time. I never traded before 9:30. This is by 30 minute. I mean, I never traded before 9:30. The bell would ring at 9:30 and that's when I would start my day. And then things started to change. And it began in 2020. And let's see if it was April of 2020. All right, so April of 2020, it doesn't look like it looks like I started to dip my toe in a little bit pre-market. All right, let's look at May. And in April, I made $90,000. In May, I made $200,000. 15 minute, a little bit more. Not a lot, but a little bit more, 18,000. Okay, now let's look at June. June, the market got crazy hot. I made $1.3 million in profit. And now, all of a sudden, we were just seeing these moves earlier and earlier and earlier. And so it was really in a very quick progression from never trading pre-market to within 2 months, dipping my toe in a little bit and then going all in. And so now, if you look at my metrics, you know, from that period of time through now, I've got $5 million in profit. And if we look at 30-minute range, you can see starting at, so this is beginning at 9:30. So in fact, now almost half my profit in this window has come between 7 and 9:30, and the rest from 9:30 till 10. So you have this peak certainly between 9 and 9:30, sort of right around the open. And the reason this has happened, and it happened again today. Today I'm up 20,000 bucks, and I traded CLEU. This was a stock that, and I'll just show you my my P&L here. So let's see. So this is when I first log in, it's always my main account, and then this is my retirement account. So 20,000 bucks. Look at this move on CLEU. You know, this is the stuff that's kind of tricky, where this made a big move pre-market, and by the time the bell was ringing, it just faded. My trades here were buying the 1 minute pullbacks, and we actually had several of them. So this goes all the way back to setup 1, first pullback right there. This is another kind of pullback right here. Another pullback here, another pullback here. So anyways, and then by the time the bell was ringing, we did get a little bit of a surge higher for a second, and then it rolled over. So I think what's happened is that more and more traders have, once you see something starting to open up, not wanting to wait until the bell rings. So as a result, a change, and so when I taught the last live classes, it was actually in June of last year when the market was going crazy, and so we were certainly acknowledging at that time that maybe trading pre-market certainly does make sense, but now I'm finding in this market that it does more and more so. And then pretty consistently past 11 a.m., it starts to get pretty choppy. You know, it doesn't mean that occasionally I won't have, you know, a $100,000 winner at 2:30, but then there's $117,000 in losses at 1:30. So, you know, it ends up all canceling itself out, which means the best time for me to trade is between 7 a.m. right now and about 11:30. Although today I didn't start until I think 8:30, and that's fine. I don't show up at 7 a.m. every single day. I will. So let me finish that sentence. So when would I go ahead and wake up early? When would I go ahead and wake up at 4 a.m.? I woke up at 4 a.m. to trade pre-market on GameStop. It was the first time in my entire career I did it, but I felt that it made sense because of how fast GameStop was moving. And I had already seen it during pre-market sessions just going so fast that I recognized that if I wait for this, I'm just going to totally miss the move. So that was 15, 20, 21. Let me just go back and kind of zoom into this little window. So that was this area here, so from the 25th to the 29th. So 25th through the 29th. So in this little area here, I was trading pretty early. So let's look at the detailed and we'll look at the time of day. So I got a $43,000 winner at 4 a.m. on one day. A couple of small losses there, 5 a.m. and 6 a.m. So actually kind of canceling out that winner. If we dial it in a little bit more, it's $125,000. Then I had a good size loss, you know, and then really it got more consistent at 7 during that stretch. So one thing that we know is that brokers well, as of right now today, and this may be different by the time some of you guys are watching this, but as of right now today, brokers like Robinhood and TD Ameritrade and E-Trade don't let you start trading before 7 a.m. Eastern Standard Time. And so if you start at 4 a.m., you'll be trading against mostly professional traders who have access to professional trading software like Lightspeed. Not that they're necessarily licensed, but that they really know what they're doing. And then starting at 7 a.m., that's when all of a sudden these other brokers start coming online and you start seeing a lot more volume. So more volume means more volatility and often easier to trade. So at this point, I probably wouldn't, I don't think I would wake up at 4 a.m. again. That was a very short window where I did it. And at the beginning of that window, I was like, yeah, this is working out pretty nicely. Let's see. But then on that Friday, so if I go to the 28th, then it's like, yeah, man, waking up at 4 a.m. seems to be paying off. You made $125,000 at 4 a.m. between 4 a.m. and 4:15 on GameStop. But then that Friday, I lost $84,000 at 4 a.m. So, you know, I still net green, but, you know, not quite as nicely. So at this point, I probably wouldn't wake up at 4 a.m. But if I was going to wake up at maybe 6:30 to be sitting here in front of my computer by 7 a.m., I would only do that if we were in a really, really hot market where we were seeing huge moves early and where I was recognizing that if I don't get up early, I'm just going to miss those opportunities. So right now, today, I was like, I'm not waking up early. Yesterday wasn't that great. This whole week hasn't been terrific. So I'm just going to come in at kind of my regular 8 a.m. time and maybe take some trades between 8:30 and 9:30 and then trade, you know, from the bell until 10:30 or whatever the case is, and then start to slow down. And I think that was the right move today. So I'll probably do the same thing on Tuesday. We've got a market holiday on Monday. So when we come back on Tuesday, I'm not going to get up first day after a holiday weekend at, you know, 6:30 to be there at 7 a.m. It's not worth it. So I'll read this to you. So for years, I would almost never trade pre-market. Sometimes we would see a big move pre-market and I would just accept that I missed it, but they weren't a daily occurrence. So I didn't really feel that bad. They were kind of random. And when we look at some of those charts from 2014, 15, 16, and even early 17, it was very common that we would see a gap scanner where the leading gapper was gapping up 40, 50% on only 150,000 shares of volume. And it was gapping up with a catalyst, but traders weren't trading it. until the bell would ring. We know that pre-market, there are fewer market makers that are trading. So, and all of the orders that are out there as traditional good till cancel limit orders are not online pre-market. They don't execute stop orders. Nothing like that executes pre-market. So pre-market, you generally have bigger spreads. You have less liquidity. And I guess what's happened in the last couple of years, and really in the last year, is that more and more so traders have recognized that actually can be the time where you see incredible moves. And I used to just write it off, but then eventually I realized I need to start adapting to this current market. So in 2020, the market was extremely hot for momentum trading. And we had been seeing multiple 100, 200% gap and go stocks each day for several weeks. And we were noticing more and more that they were squeezing up pre-market. Essentially what was happening was traders didn't want to wait till 9:30 to start buying when they were seeing that the gapper right out of the gates was squeezing into a halt and continuing higher. So they'd start buying pre-market to anticipate that squeeze. That's what we all do. Generally we all try to get in a little early to anticipate the breakout. So eventually stocks simply started making their big moves pre-market. And sometimes by the opening bell, they were already fading back down. And so at that point, I recognized that I need to adapt to current market conditions to begin trading earlier on a more regular basis. So, those of you guys who are in Europe, I'm a little jealous because you don't have to wake up at, 5, 6 a.m. to be able to be, dialed in early. Market opens at 3:30 in the afternoon in Italy. Now that's 9:30. So 6:30 a.m. is 12:30, lunchtime for you guys. So it's not a big deal for you to sit down and even be there at the 4 a.m. open. Now, fortunately, that's generally not necessary. But, to be honest, if we really see this as a regular occurrence, I might go and spend a few months in Spain or Italy so I can trade and not be on such a crazy schedule. I'm going to adapt to the market. If that means going to a time zone that is more convenient for me, I might do it, because I'll tell you that waking up at 4 in the morning, it's just, that was not working for my schedule very well. But in any case, if you do well enough trading, you may be able to afford to do something like that. But trading pre-market continues to be very much based on the strength of the current market and the current gap scanners. However, with more traders in the market in general, it's possible we continue to see this trend of pre-market action. And the nice thing here is that if I do go red pre-market, there's still a lot of time in the day to recover those losses as long as I haven't hit my max loss. Now, for those of you in LA, Alaska, Hawaii, I really feel for you, because you're already getting up super early to trade, and it just may not be practical for you to be waking up at 2 in the morning to start trading. I mean, it just may not be practical. And so I'll remind you that the good news is that while I do have some nice, bursts of early trading here, I'm also still very consistent, at between 9:30 and 10:30, 11. So if you're only able to trade that window, you can do fine. If you're only able to trade in the afternoon, there's still opportunity in the afternoon. I think what happens to me is that this is the result of decision fatigue, because by the time I'm sitting here, I may have been trading from 4 in the morning on some days, or from 7. And so I'm getting to a point where I'm tired, I'm not in the zone, I'm not as focused, and I'm then more apt to make mistakes. So if your day starts at 12 noon, although that is not typically the time during the lunch hour where we would see peak volatility, but going into 1, 2, 3, and then power hour from power hour can really be from like 2 to 4 p.m. into the close. You can certainly do well and trade during those times of day. And you wouldn't have the same decision fatigue if you hadn't already started so early. So I just want to kind of disclaim that I think that this is not just that the market is not as easy. I think it's also a decision fatigue issue. All right, so those are the market conditions that would accommodate pre-market gap and go trades. So the entry on a pre-market gap and go trade would be based on any of the previously discussed strategies except the red to green move and except the opening range breakout. The red to green move and the opening range breakout, obviously those are very contingent on, and that's a setup that occurs after the market has opened. But all of the rest, first pullback, the break of a $0.50, whole dollar, flat top breakout, those are all fine. You can certainly be trading those really at any time pre-market. So the target, often a squeeze up to the nearest half dollar, whole dollar, possibly back up to the pre-market highs if we're buying a break of that pre-market pivot, or potentially looking at daily levels of where do we have resistance on the daily chart, because that will help us create intraday price targets. If we have a blue sky setup, a stock that's at all-time highs, then we have more opportunity for a bigger move. Risk factors. The biggest risk factor is trading a low volume stock pre-market. Now, a stock like CLIU that I traded today currently has, currently has 42 million shares of volume. And pre-market, when I was trading it, I want to say it already had 5 million shares before I took my first trade, and was up to probably 16 or 17, maybe more, million shares of volume by the open. So it was really trading on pretty heavy volume. So that's not a problem. However, there was a stock this morning, HDST or HSDT? HSDT. This one was very light volume, and this squeezed from 15 up to 21, and then look at these candles back down to 16. So light volume stocks like this, what can happen is they just kind of, you could look at the level 2 and there'll be huge spreads. There's big spreads because there's not a lot of buyers and there's not a lot of sellers, even during regular trading hours. And so it's even worse pre-market. And so, all it takes, I suppose, in some of these instances are a few traders, big traders out there with enough size jumping on it, and you get this squeeze. Now, in the case of a stock that has a good catalyst, maybe they're the first ones to see it, and that's totally fine. It's obviously, they're perfectly free to bid a stock up if they really like it. But if there's no real catalyst, then it's going to probably come back down. Now, this did have a catalyst here, a headline this morning. But even in spite of that, this faded back down. And so there weren't enough traders out there that were interested. It was a low volume. It started to pop up, and then it came right back down. So that's definitely, that's a risk factor. If we look at the level 2 on this one, HSDT, actually, the spread's not that bad. It's only a 9-cent spread. But AEI is another one. This one's got 25-cent spread with 48,000 shares of volume. And this is one both yesterday and earlier in the week that went from 850 to 1650. But it was on very light volume. And this had circuit breaker halts because it was during regular trading hours. But you can see a move like this pre-market where it would just go straight up. No halts pre-market, right? We don't have circuit breaker halts pre-market. So it just goes straight up and then comes right back down. So from 8 to 16 and back to 10. So that's the risk of trading pre-market, and that risk is particularly on low volume stocks. And certainly it's going to be higher on stocks that have lower floats because the lower floats already have lower levels of supply. So the number of orders that are going to be lined up during regular trading hours is thinner. We can recognize that in level 2, and so pre-market even more so. So back to our slides. Stop loss usually nearest half dollar or whole dollar, 10 to 20 cents away. Mental stops, because pre-market, there are no live stop orders. Remember, pre-market, people that put out stop orders, they don't execute. Limit orders don't execute if you had put a good till cancel order like the previous day. Those don't execute until the bell rings, which is why right at the open, we sometimes see that flush, that quick drop as all those stop orders or profit target orders execute at the open. So pre-market is only mental stops. And sometimes a 10 to 20 cent stop is going to be way too tight. It's not even going to be possible on a stock like HSDT that has big spreads, or on AEI where you've already got a 25-cent spread. On stocks like that, you're talking about 50 cent to $1 a share stops. Generally, I will only trade pre-market during an extremely hot market where we're seeing multiple 50 to 100% gappers each day. So today, if we take a peek at the gap scan, you'll see that we had a couple of big gappers. So we had CLEU, which was gapping up 125%, ARTL 76%, and then it kind of dipped down a little bit from there. But still, we had our leading gapper was up over 100%. It made sense to be trading it. There are currently no circuit breaker halts pre-market. That could change, and it may because of the volatility that we've seen in the last year. But sometimes those types of changes to the market are slow to, kind of keep up with changes in market sentiment and things like that. So we may see that at some point. Maybe it's 6 months from now, maybe it's a year from now, maybe it's 2 years, maybe it never happens. But given that previously we didn't usually have those types of volatility pre-market, it made sense that there were no circuit breakers pre-market, but now it might start to make sense. But given that, you can see incredible 100 to 200% squeezes where a stock literally will surge from 4, 5, 8, 10, 12. It starts almost jumping $2 a share at a time. 14, 16, 18, 20, 22, 24, 25. I've seen a stock go from $5 to $35 a share in almost 2 minutes. Now, the problem is that's almost impossible to actually trade in that moment because it's just going straight up parabolic. And when a stock just goes straight parabolic, you know, where's your entry? It's just, it's hard to manage risk on it. I'll move my video up here for you for now. So, but it just tells us the potential. And so, you know, if we get a good 1 minute pullback, then maybe we could ride the next leg up. But pre-market trading isn't a specific setup. It's just simply the time of day for some of these trades where I would maybe trade a traditional VWAP breakout or first pullback or an ABCD pattern, but only in a hot market. So we can find the stocks moving on our scanners. The scanners are running early, so we will see stocks as they're moving higher. But this again is reiterating the risk of holding from 9:29 to 9:31. Seemingly no big deal. It's a 2 minute window. Why does it matter to hold from 9:29 to 9:30? But the second the bell rings, all of those orders out there are going to execute. If there are any, so in this case, this stock was pre-marketed at $1.20. The bell rings and it opens at 69 cents. So what that tells us is that right at the open there was an imbalance, right? So just to get my my sketch pad out here. So we were at, you know, $1.20 pre-market. So we're sitting here at $1.20 pre-market. That's fine. However, the second the bell rings, you have all of these sell orders, and then you're going to have some buy orders. So the second the bell rings, you've got this sort of imbalance with the buyers and sellers. And in this case, my suspicion would be that given it dropped here, you probably had a big sell order that executed. Now, the fact is this was relatively light volume pre-market, but, you know, let's just say that, you know, whatever the share size is, maybe it's a 100,000 share block order. And maybe there weren't a lot of people that had orders already lined up to be a buyer at the open. Now, we might have our orders lined up in the sense that, you know, they're right here, and so all we have to do is click the buy button. But unless we've already, because the way I'm trading, these orders go through pre-market. So unless I was using like a market day order or maybe a good till cancel order, pre-market, those type of orders will not execute pre-market. So, but most of us don't do that. And so in the case of this stock, what likely happened is that the bell rang and instantly a sell order was triggered. And so what the exchange has to do is they have an imbalance. And so at the open, if they have, you know, 75,000 shares of sell orders and only 1,000 shares of buy orders, there's an imbalance. So now they have to figure, okay, we've got to sell 75,000 shares at the open. So there's 1,000 shares of buy orders, let's say in this case at $1.20. And then there's another 5,000 shares at $1.10, another 5,000 shares at $1, another 10,000 shares at 90 cents, another 20,000 shares at 85 cents, and another 10,000 shares at 60 cents. And, you know, let's just say there's nothing else. Then all of a sudden, to clear that imbalance, it's going to have to sweep out all of those orders. So it goes and it opens way down here. And now the person that was selling, they don't get that 120 or $1.20 average on the exit. They get the average of all of these orders down here as they fill low. So essentially, that's one of the reasons we also don't use market orders, because when you use a market order, you can get a lot of slippage, as we know. And the market makers can sometimes abuse that a little bit. We know that they have algorithms that try to sort of, I don't know, there's a whole lot of stuff behind the curtains that we don't really see. But we don't want to give a market maker the chance to abuse us and give us really big slippage by using a market order. But if you had a profit target and it executed, that's a market order. So anyways, it ends up all of a sudden people are like, whoa, what that just happened? And it does squeeze up at the open as some people recognize the huge dip, squeeze up a second time, but that's just a very risky situation if you were already holding. Now, this is a trade on Pixie that we talked about earlier. It's a great, perfect first 1 minute candle to make a new high right here. That's a picture perfect setup right there. And this was okay right there. So, I mean, something like that, That's so clean. There's no reason that you wouldn't have wanted to try to catch that trade. So that's right there. So yes, that was happening pre-market. How would we have found the stock? Gap scanners, right? It's on the gap scanners. It's squeezing up. It's probably the leading gapper in the entire market. I generally, when I trade pre-market, am only trading one of the leading gappers. And so leading gapper took the trade. This is another one, AMRH. So look at that squeeze from $1.50 right here, and it just goes straight up here to $4.50. So, I mean, that's a huge move. Look at that. I mean, that's what we're talking about. You don't have moves like that during regular trading hours without halts. Because during regular trading hours, we halt every 10 to 20%, depending on the price of the stock and also, well, the time of the day. So anyways, it surges up, it pulls back, a little consolidation, and then boom, right there, breakout, rips through the high. So we definitely would have wanted to trade that, right? Absolutely. Now that setup right there is, this is not exactly a first candle to make a new high, because this was the first candle to make a new high. Then it made a new high here, then it pops up, consolidates. But in this case, I might have drawn an ascending support line and been able to say that this is just sort of ascending higher. Volume is starting to come in as it's moving up. This is something that's worth jumping on right through here. And then this still gives a gap and go trade. It still gives a trade at the open. Yes, Adrian, correct. There are no circuit breaker halts pre-market. The only type of halts that happen pre-market are halts pending news and halts, there could be a T12 halt. The exchange could halt a stock if they wanted to. So those are the two types of halts that we'll see, but we will not see LULD halts pre-market, which means also on our level 2 windows here, we won't see this LULD level pre-market. So that's gone pre-market. We don't see it. It's not there. All right, so let me just grab this, put this back down here. Okay, here's another one. So this is a stock that you certainly could have waited to the open, although, you know, in this case, the open was actually kind of choppy. You can see here, it was red, drops down, then it rips back up. It actually halted up right here. I can tell because of that little blip. So that means during that 5-minute candle, there was no volume because of the halt, right? It was just a sideways candle. Then it opens high, opens, pops, and drops. But then all of a sudden here, a little later in the morning, this is around, I'm actually not sure what time, but around here, all of a sudden, we get the break back over the volume weighted average price and a squeeze higher. And this, in that area, we would consider that to be a traditional momentum trade, and we might look at the same example a little bit later in chapter 8. But right back here, it starts to open up. All of a sudden, notice the volume picking up here, 7 a.m., more traders coming into the market. Volume starts to pick up. We start to get the first pullbacks. So something that's also worth noting here is that when I've traded after hours, which would be anytime after 4 p.m. until 8 p.m., when I've traded after hours, what you generally find is dwindling volume as we go further into after hours. So a stock yesterday actually that made a little bit of a move after hours was WNW. So that, oh my God, look at that. So son of a gun. I lost $1,500 on that today. But anyways, so this one made a move after hours. But the problem is, as you get further and further into after hours, while it's true that this is actually starting to set up what was probably a 5-minute bull flag, we're getting later and later into the after hours session. Volume dwindles. It gets lower and lower and lower and lower. Whereas pre-market, volume starts really light and then increases as we get closer and closer to the bell. Now that may not be, and that's generally the case on a stock that's doing something interesting. So not really the case on this one particularly, but certainly the case on CLEU. Volume is light pre-market and then gets higher and higher and higher and higher. And you know, pre-market here goes, this was 7 a.m. So really volume started to pick up more as it broke through the volume weighted average price. But in any case, so here we see volume increasing. So as it continues higher, more traders are going to be noticing it. It's going to move higher. And so it makes sense that as we get from 7 to 8 to 9, if it continues to move higher, that more and more traders are kind of coming online and noticing the opportunity of the stock. So that's from 8, and that's a later day trade. This is one where we have this kind of clear flat top resistance at about 890. And then pre-market around looks like 830. It rips through that level, breaks it. First pullback is a dip. So there's the first pullback, and then there's the move higher. And then you get consolidation, and then at the open, more opportunities. This is another one that was really strong pre-market. It was just ascending higher and higher and higher. So first pullbacks here. This was a first pullback on the 1 minute chart. So I'll zoom in on this one. So right there's a 1 minute pullback right there. And then this would have been a 5 minute bull flag. I can guarantee you, because we're on the 1 minute chart here. So by the time this pattern here had fully consolidated, this was a first 5 minute candle making a new high, and you got awesome resolution there. Pulls back, another squeeze higher. And this goes from 3 to 4 and then up to $6. You know, I mean, that's a nice move. Here's another one. Sometimes the Momo doesn't wait, and then by the bell, the trade is done. And that was the case today, and it was the case on this stock as well, where you had this move from $1.10 all the way up to $3. You got this curl up, volume, notice the volume increasing as we get closer to the open. And then unfortunately on this one, the open, and it starts to sell off. Pull back, pull back, pull back. First pullback was the setup on this one. Now, I can't tell, let's see. This pullback was at about $1.70. This one was just around $2.10. So that kind of $0.50 whole dollar spot right there. This one was about $2.50, right over the $0.50. And then this squeezed up to $2.90. Couldn't break through the next level. This is a traditional break of VWAP pattern, which we actually didn't really talk about as a gap and go strategy, because to be honest, the break of VWAP was never a pre-market strategy. It was always a momentum strategy because there's never really enough volume pre-market. So in Chapter 8, we're going to talk about the break of VWAP as a momentum strategy. And in fact, it is one now that we can trade pre-market given the volume that we have. And just to sort of clarify here, the gap and go strategy for me was when I was first, getting kind of more consistent with trading, I was looking at the stocks gapping up each morning, and my job was, of course, just like yours, to try to find which stocks have the highest likelihood of making a 20 to 30% move. And I found sort of most consistently it was the leading gappers and in the first 15, 20, 30 minutes of the market. And so my focus was, can I hit my daily goal by 10 a.m.? Can I get green and then shut it down? And so that little window was gap and go. And now, of course, as I got comfortable with trading, I would continue trading later into the day, which was no longer really gap and go, but just general momentum. Gap and go is momentum, but it's sort of exclusive to that time of day. So really something pre-market, it's still a gap and go stock, but it's also a momentum strategy. So there's definitely overlap here, and I could probably consolidate it all into one crazy long chapter, but or maybe I could add the VWAP breakout with more detail to gap and go, but we're going to catch up on that in the momentum chapter. So that's coming soon. But anyways, here's the pullback right there. And then there's that rip through. It comes back down, bounces off this critical level of support, and then continues higher up to 21. Pre-market momentum here on this one. This not as clean. The chart, it definitely looks choppier, but it just kept going. Now this one looks nice. Nice clean pullback right there at 389. This goes from, $2 to $8.50. It was definitely the leading gapper. That's a huge move. And notice the volume increasing. So as the waves go higher, the volume increases. That's an awesome volume profile. That's what we love to see. And so then we got a huge break here of 650 and big volume on that move. At that point, that's probably when more traders were dialed in on it. $100,000 on the day. I mean, look at this. This SQBG, $82,000. It's kind of crazy, but the fact is this went from $6 to $17. That's $11 a share pre-market. And there were more trades once the bell rang, but this pullback here and then this one here and this one, those are some of the biggest candles, some of the biggest moves. I mean, this was nice here. I mean, the whole thing was nice, but it started pre-market. So pre-market can start to build that cushion then into the day. Something that I'll mention here, just as it's on my mind, yesterday was a day where I, on my first two trades, dropped below my max loss. So first two trades, right out of the gates, lost 20 grand on the first one, below max loss on the second one. Two big losses, boom, boom. And it was like, oh my God, what time is it? It's like 7 a.m. and I'm already double my max loss. Should I stop trading? Well, it's 7 a.m. I mean, who knows what could happen in the market between now and, 10:30. So I was like, no, I shouldn't stop. I just try to stay focused. And so I said, all right, well, since I'm already below my max loss, even my instinct right now is to increase my share size to try to, hit a home run grand slam and make back all those losses. I said, let's do the opposite. Let's trade with smaller share size. Let's see if I can start to get my groove back. And I did. And then once I'd cut the losses in half, I was like, okay, let's size up a little bit more. I sized up a little bit more, not to bigger than full size, but actually, I think my biggest size was 20,000 shares, whereas maybe 30, but my full size is 50 to 75,000, 100,000 shares right now. So still trading relatively small size. Made back, got myself back, made back those losses back to flat. And at that point I was like, okay, now let's start to size down. And so anyways, yesterday finished okay, but it wasn't a good start. And so today I said, well, imagine if you'd finished yesterday down, $50,000. How would you approach today? And I said to myself, well, I would say, let's start with small size and just dip my toe in the water and see how the market feels. And if it feels good and I start to build a little cushion, I'll start to increase size. So on my first trade, I took 3,000 shares. So on my first 3 trades, I made about $1,700. So not a lot of money, but I was like, okay, I'm starting to feel okay. Increase my size then to 10,000 shares. Got myself up 3,500, 4,500 to 5,000. Then I said, okay, I've got a cushion. My daily goal is 10 grand. So then increased my size to max of 20. Traded up to 15,000, up to $20,000 in profit. And then I said, I'm bringing my size down to 10,000 shares. Now I'm cutting it in half. I'm scaling back down. Got myself up to 22,000. I said, I'm cutting it back down again to 5,000 shares. Dropped back then on 2 losses to 20,000, which is where I sit right now. And I said, okay, that's it. I'm done. So today, what I didn't want to have happen was in my first 2 trades, hit my max loss again. So I was like, because I don't want that to happen, and I'm a little unsure about the market, given how difficult yesterday morning was, I'm going to start with small size. That way, if I go red, the loss is small. I can pretty easily recover, or I can say, you know what, I'm going to stop here with a small red day. Market's not hot. I'll come back tomorrow. But it was okay. So then it's sort of warming up, stretching before you go in for the big, game. I don't know. And so then, kind of warming up with small size, getting comfortable, building a cushion, building a little confidence. Market seems good. Now sizing up. Now, some people would say, hey, I'm just going to start small, and as soon as I'm green, I'm just going to stop. And that's more conservative. But ultimately, if you start with whatever size, is that your half size? Is it your full size? So I think starting smaller, if the market's hot, then sizing up a little bit, getting towards your daily goal, you cross it, starting to reduce size. Now that's me trading a little more defensively and a little more conservatively. In a hot market, sometimes I come in swinging on the first trade with 30,000 shares, I'm up 12 grand, right? 30, 40 cents with 30,000 shares, $12,000. Dip trade, back long 30, scaling up to 50,000 shares into my next trade. I'm up $30,000, $40,000 in 2 trades. Sometimes the market calls for that. That's a hot market. Sometimes once I'm up $20,000, $30,000, then I'm starting to go 50, 75, 100,000 shares on my next trade, trying to get up to that $100,000 a day type of level. Some markets call for that. Some markets can accommodate that level of being on more of the offense, being aggressive. But that doesn't happen to be the case in this market right now. So, on the one hand, probably for none of you, it's going to make sense to just scale your risk up and up and up and up as you go into the day in your first year of trading. I think probably what's going to be more consistent for all of you is while you may see someone like me or another member of the 100K Club, another profitable trader scaling up their risk, the thing for most beginner traders is being really protective of what you've already cleared and keeping it in your pocket as profit. And so, by the time I was up 20,000 or 22,000 and I scaled down to 5,000 share max size, at that point, the odds of me giving back the whole day, I'd have to lose 4 points with 5,000 shares. Could it happen? Yeah, if I took the wrong type of stock with that size, but it would be pretty difficult. Whereas if I had continued to increase size or stayed at 20,000 or even gone to 30,000, then those last 2 trades could have easily dropped me back down to up only 8 or 10, which, given what happened yesterday, would have brought back those emotions, the frustration, and is not a great way to finish the day. So that's a little bit of a tangent, but just to say, for me, starting pre-market in, and right now you could say, well, it's not a crazy hot market. Why are you even trading pre-market? Well, it's still hot enough that we're seeing stocks like CLEU making big moves pre-market. So It's hot, but it's not crazy hot. It's hot enough to keep trading pre-market. It's not hot enough to keep increasing the risk through the whole day. So here's another one, first and second pullbacks, pre-market, first pullback, second pullback, even a third pullback there. So again, these are the same setups that I've already taught you about. They're not different. It just happens that these ones are examples of taking these trades pre-market. Break of the volume weighted average price, so that same setup that we've now seen so many times. All right, let's see. What else do we have? So there we've got consolidation, a break through the volume weighted average price. That's nice. Nice squeeze there from 7 up to 950, pull back. So break of VWAP is the setup on that one right there. All right, so with that, we are going to continue on to Chapter 8, Intro to my general momentum strategies. Again, not exclusive of the gap and go, but we're going to be talking more and more about trading past that typical first 15, 20 minutes and seeing if we can catch some more momentum. We'll keep talking about buying first pullbacks. We'll keep talking about flat top breakouts, half dollars, whole dollars, but we'll also start talking about some of these more complex setups like a late morning, late day ABCD pattern and break of VWAP. All right, so let's get into it with Chapter 8. Those of you in the LMS, make sure you do your quizzes before continuing on.